Hey, it's Andreas, and welcome back to the channel. Today I have a video for you that hopefully will make you a little bit better with money. And I will cover some of my thoughts regarding capital allocation in this market because we've seen growth stocks being slaughtered while value stocks have held up very well over this period. All right. And I mean, if you think about it, and reminisce about the period of 2008 with the mind and the eyes of a person in today, then what would you have not given to be able to invest a lot of money right in the housing crisis and the stock market collapse and just seeing that huge gain in wealth that comes from taking a risk and being right? I think most of us would have been very happy, to take the risk back then. And I believe that we're in a similar situation today with growth stocks. Now, do I know this for certain? Of course not. The market could go down another 20, 30, or 50% again for all I know. But I think that in this case, for me, as a young person, it makes sense to take a calculated risk and sell off 20% of my stake in VMware to buy more growth stocks such as Palantir and StoneCo. And if we look at some news outlets and some other channels on YouTube, they talk as if there's a recession coming. But I mean, to me, when I look around, this does not feel as a recession. And I look at one of the major indicators out there for the potential for a recession, and that's unemployment. Now, unemployment right now is very low, not at all in recession territory. Businesses are basically screaming for labor, and if we look at the availability of goods, we can see that there's long wait to buy certain types of clothes or watches, and there's basically a lot of demand in the economy. The economy feels roaring and alive and not at all recession like. So this is point number one in me taking a calculated risk. Point number two is that if you remember earlier this week, the inflation numbers came out in the United States, and it was a bit of a negative surprise with inflation coming in at 7.5%. However, there was no great dip in the market. These bad news did not cause a dip. And if the market's not dipping on bad news, well, then perhaps this has already been priced in. Perhaps this is a sign of a bottom. And just to show you how bad news 7.5% inflation is, I did a quick calculation here, some quick math in Excel, and just to calculate the net present value of cash, to see the purchase power of cash. So let's say that you have $100, and then by the end of this year, with 7.5% inflation, the purchase power will be that of $92.5. And then in only 5 years, with an inflation on a yearly basis of 7.5%, you will have lost 33% of your purchase power if you just had the cash in the mattress, not gaining interest on it, not having it invested or anything like that. So inflation at 7.5% is very bad news for the economy, and the fact that the market is not dipping is what something that I see as a sign of a potential bottom. Now, remember, this is a calculated risk on my part. I'm in no way certain that this is the bottom. And this is where capital allocation strategies comes in. I can rotate out 20% of my biggest holding, which is VMware, and put that into high risk growth companies. And then if it continues to go down, I can sell out another 20% and do that 2 to 3 times to reallocate my capital into riskier assets and potentially reap greater future rewards from growth stocks coming roaring back to the old glory days. This has been my thoughts, a conscious stream on how I see the macro trends in the market right now. And what do you think? Do you think that this is a potential bottom? Do you think we have further down to go? Let me know in the comments below. And as always, I hope you make a ton of money, whatever trades you decide to do. Take care now. Bye bye.